Welcome to the Recon Trader. In today's video, I will share with you how I utilize the backtesting feature on the Mudrex platform to deploy profitable automated crypto trading bots. As you can see, I have 4 bots currently deployed on the Mudrex platform, and they're all profitable at this time. My Ichi Cross is obviously the most profitable, but it's also been deployed the longest, almost 3 months. Now the Recon Bull, that actually utilizes a MACD moving average strategy, and it has only been deployed maybe about a month. My Engulfing Toro strategy is basically the pattern based on engulfing bullish candles, and that one's only been deployed for a couple weeks, maybe 3 weeks, and it's doing all right. And then the Ichi Cross Biff ETH, that is my Ichi Cross strategy deployed on Binance Futures, and that's only been deployed for a couple days now, and it's had a decent win and a small loss. It's starting out on the right foot anyway. Now, if you're not familiar with Mudrex, they basically offer you the opportunity to create and deploy your own algo-based strategies. And you can get started for free as far as a monthly fee goes. Now, you will be charged a percentage of the volume you actually trade once you are above $500. But you can get started for free and not pay a monthly fee, and that would get you 100 monthly back tests. But for a small investment of $16 a month, plus you'll get a 1-month free trial when you do sign up for the $16 a month subscription, you get unlimited back testing. And I can tell you, their backtesting feature is bar none the best that I have seen in the crypto industry. It gives you the best information, and I'll let you in on a little secret. I have used their backtesting feature to deploy bots on other platforms. I've also used it for day trading strategies. Now, I do know the team at Mudrex does watch my videos, so that secret's out of the bag. But for $16 a month, I would gladly pay that for unlimited backtesting on their platform. And with that being said, I will leave a link down in the description, and if you use that link, you'll get a $25 sign-up bonus on top of your 1-month free trial. Alright, I think that's enough jaw-jacking. Let's get to actually running a few different backtests. Now, I'm going to use my Ichimoku Cross strategy. If you've not seen that strategy, first off, you need to shoot that subscribe button so you don't miss out on those videos. But you can check out my playlist and see how I actually configure this Ichimoku crossing strategy. It's based on the conversion line crossing the baseline on the Ichimoku cloud indicator. So once you have your strategy configured, you just drop down here to the backtest button, click on that, and then you would select your exchange from the list of exchanges, and in this case I'm going to run it on Binance, and then the market I'm going to run it on will be USDT, the asset will be ETH, and the time frame is going to be 1 hour. Now, I've done a ton of backtesting on this strategy, and I happen to know that this will produce probably the best results. So I hit start backtest, and you can see down here at the bottom the backtest has started, and it looks like the monthly average returns would be 16%. Now over here under actions, there's a little box with an arrow. If I click on that, that's going to give me more detailed results. And from these detailed results, I can really start to break down whether the risk is going to be acceptable on this strategy, what type of profit I can expect, and whether or not it would be justified to deploy this bot. Now, the period that the initial backtest ran for was from August 19th, 2019 to February 19th, 2021. That's a pretty broad spectrum of time, and that will kind of let you know how your strategy would perform over several different trends in the market. We saw some sell-offs during this time. We're now currently in a bull market, and the strategy did hold its own over a long period of time, and that's something you want to look at. And with that all being said, for me, I'm really looking for the short term, how this bot would perform in current market conditions. So in that case, I'm going to click on the 3-month time frame, and you can also adjust your fees. And in this case, for Binance, I get charged 0.075% fee, not the 1%, because I do pay my fees in the BNB token. And now that I have those adjustments made, we're going to do a 3-month test with the fees I actually pay. I'm going to hit recalculate. And we can see for the 3-month period, my monthly average return is almost 44%. And my loss-making months were 0%. I didn't have any loss-making months. Now the next item is the performance score, and that is something that Mudrex has put together to help investors get an idea of the type of performance you can expect from this bot. And basically it scores from 0 to 10, and any number less than 4 can be considered poor. Any number between 5 to 7 is average, and any number greater than 8 is good. In this case, the strategy scored a 9, so that would be considered good. Next is my max drawdown, and that's kind of a worst case scenario. It measures the distance of loss from the previous equity peak and what your maximum drawdown from that would be. And in this case, it was 14.19%. You typically want this number lower than higher, obviously. And I typically try to shoot for something less than 25 to 30%. Depending on the strategy, I do have different risk tolerance levels based on strategies. But in this case, I'd be extremely happy with this max drawdown because it's definitely below the 25% range. Now, for some of you action junkies, and I get a lot of emails, hey, my bot hasn't done anything. Is it working? Most of my strategies aren't based on a whole lot of action. I just want the best performance when I am engaged with a target. And during a 3-month period, this bot would have only seen 22 trades, which is only about 7 trades a month. And I know some of you want to see 3 or 4 trades a day. That's not going to be my strategies. And that is why most of my videos are how to set up, not how to copy my strategy. Now, the next and maybe one of the most important measures is the Sharpe ratio. And that basically calculates your risk-adjusted return. And it takes into consideration a risk-free rate and volatility to come up with this factor. Now, industry-wide, whether it's stocks, hedge funds, or what have you, anything over a 1 is considered good. And anything obviously above 3 and above, then you're really winning the battle at that point in time. Now, I will also say, in my opinion, this number can be too high, which means you're not putting on enough risk. But in this case, I'm at a 6.33 Sharpe ratio. That is actually a very good score as far as Sharpe ratio goes in my book. Next is the profit factor, and that is basically your gross profit divided by your gross loss to come up with your profit factor. And again, anything over 1 is acceptable. Anything over 2 is considered good. And obviously, this is greater than 10, so that is very good. Overall returns for the 3-month period would have been 292%. Now, what I like to do is compare that to the actual market returns, and your market returns are the returns you would have had if you just bought ETH and held ETH for those 3 months. During this bull market, it is extremely difficult to outperform the run-up that we've been seeing on ETH. However, 3 months ago, had I told you I could get you a 200 and almost 93% return on ETH over a 3-month period, I'm pretty sure you would have given me your money to invest for you. Now, winning streak is exactly that, and that would be if we scroll down and look at the actual trades, that would be this streak of 9 wins in a row. And obviously, you want your winning streak probably to be greater than your losing streak. However, I do know situations where my losing streak can be greater than my winning streak as long as my average profit is substantially larger than my average loss. But I'm getting ahead of myself. Next is trades won, and the bot won 68% of its trades. Again, if you were to go down here and do a little math, you could figure out that 68% of those are winners. The other 32% are losers. And don't get me wrong, I do have strategies that are flip-flopped on that, and I'm still coming out a winner as long as my risk versus reward ratio is in my favor. But for this type of bot and strategy, I want to see this number probably above 50%. Now, my largest win was 57%, and my largest loss was 4.65%. Again, I want to see this number substantially larger than this number. And then next is your gross profit. And that is basically the profit before you minus out your losses and fees and what have you to get to your overall returns. This type of information like gross loss, gross profit, max drawdown, Sharpe ratio, profit factors. This is information that I have not found on any other platform on their backtest. Most of them just show you your overall returns for the period of time that you'd run the backtest. That might be good and well if it's a nice big number, but if you have a large max drawdown that you can't stomach, or maybe there's a losing streak of 6 in a row and you can't take 6 losses in a row, you're going to shut that bot off before it ever has a chance to actually achieve the numbers it's supposed to achieve. Now, if you were aware ahead of time the bot might have a losing streak of 4 or 5 or 6 trades, you might not be so concerned and let the bot do its thing. And this type of information is what impressed me about the Mudrex team. When I saw their back testing and the information it provided, I knew these guys were traders and I knew they knew what they were doing. Very few people in the crypto industry know what a Sharpe ratio is and the mathematical equation behind it. And an even simpler equation is the profit factor. A lot of folks don't know you basically just divide this number by this number to come up with this number. I guarantee if I asked a lot of YouTubers out there showing you all their great big wins and what have you, if you asked them what their profit factor is for their bot, you would hear crickets. They wouldn't have a clue. With that being said, let's move on. Now, the next two numbers I like because I like to know what my risk versus reward ratio would be. And I utilize this average profit on win and average loss on lost to calculate my risk versus reward ratio. So basically, my risk would be 2.19% versus my reward, which is almost 12%. So I'm looking at almost a 1 to 6 risk versus reward, which means I don't have to be right very often to be profitable. And again, I'm going to address you action junkies out there. This number here, average exposure time, is an excellent hint that you're going to be holding positions for a long time. 2 days, 16 hours, almost 3 days. That basically means you're holding a position for 3 days without entering a new position. So this strategy might be more designed for a sniper who's willing to sit and wait for profitable opportunities rather than someone who just wants to go out there and spray and pray. And then my long performance was 293, and I didn't have this bot set up to do any shorting, so that's going to be 0. It shows you your total fees. Again, a lot of platforms will show you a profit and they don't calculate the fees, and in the long run you'll end up losing because you paid more in fees than you actually made in profit. And then my max realized drawdown was only negative 7.77%. And you certainly want this number as low as possible because you don't want to see big drawdowns. Now, if we scroll down, we come into the chart, and that will kind of give you a bird's eye view of what your strategy did versus the market returns. Your strategy is the solid purple line, and the dotted line is the market returns had you just bought and held. And you can see my strategy actually really held its own. It's very tight against the market. And in this situation, you can see the movement of ETH has been pretty much parabolic recently, and my strategy is keeping up with it. The next tab would show you your monthly P&L, and if we jump to the pro graph, that will actually show you where you opened your position and where you closed your position. And then, as you have already seen me scroll down a few times, you can actually look at each individual trade. If you click on the trade, it will tell you what it bought for and what it sold for. And so if you're doubting the performance of the actual bot, you can take this information over to your exchange and look at the performance. Because with the Mudrex platform, you're not actually sending money to Mudrex. Your money is staying on your exchange, and you're connecting your API keys from your exchange so that these orders can be sent to your exchange on your behalf based on your strategy. So your money is secure on your exchange, as it can be on an exchange. And Mudrex never actually has possession of your money. So if you think Mudrex is scraping profit or anything like that, it's not possible for them to do that. And you can verify your actual entries and exits simply by looking at your transaction history, which you should be doing anyway. So now you should understand all the features of the backtest. Let's run a new backtest with an adjustment. And in this case, I'm going to add a stop loss percentage. And we're going to run at a 10.49% stop loss. I'll click OK. We have to save the strategy with the change. Now I click on backtest and we'll run the backtest again with that one change of the stop loss and see what happens to our returns. All right, so we saw a little better performance over the long haul for the returns. So let's click on the actions box. And for the long haul, we ticked up from about 16% to 16.22%. But again, I'm interested in the 3-month returns. And so let's recalculate that with the correct fees. So we get apples to apples. And lo and behold, I think they're the same numbers. And they are. I don't think anything's different over the 3-month period. What that stop loss more than likely would help is on the big downturns we saw, like back in March of 2020, when everything shut down for COVID and we saw a huge sell-off, you'd avoid a bigger loss. Where normally with my Ichimoku cloud crossing strategy, I let the cross of the conversion line down through the baseline to close my positions. By adding a stop loss, more than likely will save you from a big sell-off. Let's go back and make another adjustment. So I'm going to take that stop loss out because this is how I actually have the bot currently deployed without a stop loss. I don't recommend that for 99% of you. And I actually monitor this bot throughout the day, and I will manually close positions occasionally when I see weakness. And so I actually act as a manual stop loss for this bot.
Well, it's my safety, sir.
We'll run another back test, but I'm going to do a different time frame. And we'll do it on the 15-minute time frame. And so this will see a lot more action, but will it result in better profit? And we see the returns are cut from 16% down to 7.68%. And we see our loss-making months grew from 36.84 to 52.63. That doesn't always mean this is a loser, because remember, that back test is on a longer time frame. Let's take a look at a shorter time frame. What would have happened? And so we'll change that to the 3-month time frame. We'll update the fees and recalculate. And our performance score jumped from a 4 to an 8, so it definitely liked the new performance. However, our overall returns are only 139, and that is versus our 292%. So in my book, I would not necessarily want to deploy this bot. None of the numbers appear to be better, other than you get a lot more trades and your average hold time is 15 hours versus almost 3 days. So if you're looking for action, there you go. However, are you going to be able to stomach those 6 losses in a row versus on the other strategy, we had 2 losses in a row? Now let's give the strategy a shot on BTC. And with BTC, I'm going to actually do the 2-hour time frame and backtest that. And we see only a 6.4% return on the 2-hour time frame. Let's try the 1-hour time frame. Now you can see where that investment of $16 a month can really allow you to dive deep into these strategies and get a lot of backtesting done. So by changing from 2-hour to 1-hour, the returns improved. Let's take a look at what that looks like on a 3-month period rather than this extended time frame. And so we'll click on 3 months. We'll put in the correct fees. And we'll recalculate. And so for BTC USD on the Binance exchange, on the 1-hour tick interval, we get a performance score of 8, which again was considered good. We have a max drawdown of 27. It's a little higher than 25, but with the volatility of Bitcoin, that's actually very acceptable. Our Sharpe ratio is well above the 1 level, and I actually shoot for over 2. And my profit factor, which again is gross profit divided by gross loss, is 5.56. And the overall returns for that 3-month period was 142%, and the market was 190. So we almost held our own against the market, which again, with Bitcoin shooting up towards 56% right at this moment on this other screen, that's not too bad of returns, all considering. Now, my average loss versus my average win, that risk reward is not quite in the wheelhouse where I'd like to see it. It's about a 1 to 2. I'd prefer a 1 to 3. And let's see if we scroll down and look at the losses. The only loss really of concern is this 12% loss. The others are very small losses compared to decent sized wins. And you can see that right here. The largest losing trade was 12%. My largest win was 25. It's only double. So again, those numbers aren't great. I'd really like to reduce that 12. So let's see if we can do that by adding a stop loss. And I'm going to try a 5.5% stop loss. And now I've not actually tested this, so this will be new to me as well as new to you. So we start the back test, and while our returns went down, our performance score went up. Our loss-making months also went up. So let's take a look at actions and see what the 3-month period would look like versus this longer time frame. Because in reality, there was that 12% loss I was actually trying to eliminate. So we'll click on 3 months, put in the correct fees, click recalculate, and it looks like I cut that bigger loss in half. Our monthly average return actually went down, and our overall returns went down. And so in reality, this strategy is actually not better than the previous strategy unless you're just trying to control your risk and you can't stomach a 12% loss. So I think that pretty much wraps it up. I wanted to do a quick video on the backtesting feature that Mudrex offers on their platform. I've gone way over the length I wanted to make this video, so do me a favor, if you like the video, spike a like. If you have any questions or comments, leave those in the comment section down below. I will leave a link to Mudrex in the description down below. If you're interested in crypto trading, bots, strategies, now would be a good time to shoot that subscribe button. I will be doing a ton more videos in the future. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.